What if I told you that Ford dealerships across the country are drowning in unsold inventory? Thousands of models, everything from full-size trucks priced over $150,000 to aging SUVs no one wants, are piling up on lots nationwide. Dealers are in the middle of an inventory crisis of epic proportions. Is it overproduction? Are quality issues to blame? And most importantly, what does this mean for you as a buyer? Stick with me to the end because the truth might surprise you, and you could walk away with some of the biggest discounts Ford has ever offered. Ford F-150. Overpriced and overlooked. Sure, it is a staple of the truck market, but it is now facing an unexpected challenge. Once a bestseller, this iconic vehicle is sitting unsold on dealership lots across the country. Dealers who once struggled to keep them in stock are now desperate to offload them. What went wrong? The biggest issue is pricing. Regular Ford F-150 models now cost between $70,000 and $80,000, pricing out many potential buyers. During the recent supply chain crisis, many dealerships added market adjustments on top of the manufacturer's suggested retail price. While these tactics temporarily boosted profits, they also drove loyal customers away. Buyers who had once seen the F-150 as a practical investment were now left with sticker shock. High prices are only part of the problem. The financing terms available to make these trucks affordable are deterring buyers even further. Many consumers are being forced into long-term loans, stretching up to 10 years. While these extended loans reduce monthly payments, they come with a major risk: depreciation. Trucks purchased during the price surge have lost value far faster than expected, leaving their owners upside down on their loans. Consider the case of a customer who purchased a 2022 Ford F-150 at the height of the market. They paid $85,000 after dealer markups. Today, that same truck is worth just $38,000. Now the owner owes tens of thousands more than the vehicle's current value. Stories like this have become all too common, discouraging customers from trading in their vehicles for newer models. Without these trade-ins, dealerships are seeing sales stall, leading to growing inventory. Depreciation is not the only issue hurting F-150 sales. Rising interest rates have made borrowing more expensive, pushing monthly payments beyond what many customers can afford. Since most buyers are focused on monthly payments, when they see prices translating into payments over $1,000 a month, they walk away. Ford's dealers are aware of the problem and are calling for increased rebates and financing options to clear their lots. However, Ford has been slow to respond, frustrating dealerships that are still waiting for relief. Some industry analysts predict that discounts of up to 40% may be necessary to make these trucks competitive again. Without deep cuts, the unsold inventory will continue to pile up. Another significant factor driving buyers away is Ford's reputation for poor reliability. Dubbed the Recall King, the company has faced numerous recalls and warranty claims in recent years. For customers spending upwards of $70,000, reliability is critical. Recalls on critical systems make buyers hesitant to take the risk, especially when more dependable alternatives are available from competitors like General Motors and Toyota. Dealerships have seen firsthand how these issues have impacted customer loyalty. Shoppers who once preferred Ford are now exploring other brands that offer similar performance and features at more reasonable prices. General Motors, Toyota, and even Ram have capitalized on Ford's struggles by introducing competitive models without the reliability concerns that Ford faces. Dealers are finding it harder than ever to justify the F-150's premium price tag. The overproduction of 2024 models has made the situation even worse. Ford anticipated strong post-pandemic sales, but appears to have misjudged demand. As a result, dealerships are still receiving 2024 models despite being well into the following year. Many lots are overloaded with inventory that they cannot sell, and without significant discounts they face a growing crisis. For Ford, the stakes are high. Dealers and industry experts agree that drastic action is needed to restore sales momentum. This may include aggressive financing promotions, larger rebates, and price reductions to lure buyers back to the showroom. Without these measures, dealerships risk being stuck with unsold stock for much of the next year. For buyers, this situation presents both opportunity and risk. The inventory glut may lead to record-breaking discounts, making it a great time to negotiate for a new truck. However, depreciation and ongoing reliability concerns remain significant factors to consider. The Ford F-150 stands at a crucial turning point. Ford's reputation, pricing strategy, and response to customer concerns will determine whether the company can regain its foothold in the truck market. Until then, dealers will continue to struggle under the weight of excess inventory, offering increasingly steep discounts in a bid to recover lost sales. Ford F-250, the six-figure Super Duty disaster. This model is known for being a rugged, reliable workhorse, but today it is stuck on dealership lots across the country. Some models are priced as high as $154,000, a staggering figure that is driving customers away. Even with the truck's capabilities, few buyers are willing to take on such an enormous financial commitment, especially with rising interest rates, making monthly payments unaffordable. Dealers who once counted on the F-250 to sell itself are now desperate to move their inventory. Many are slashing prices and offering incentives to entice buyers. But even these efforts may not be enough. So how did things get so bad for one of Ford's most iconic trucks? The problem dates back to the supply chain disruptions of previous years. During that period, demand for vehicles was high, and dealerships took full advantage by adding large market adjustment fees to popular models like the F-250. Customers paid well above the manufacturer's suggested retail price, often tens of thousands more. However, market conditions have since shifted. Supply has rebounded, but demand has cooled significantly, leaving dealers with overpriced trucks they cannot sell. For those who bought trucks at inflated prices, the situation is even worse. Many F-250 owners are now dealing with extreme depreciation. Imagine paying over $100,000 for a truck in 2022, only to find that it is now worth less than half of that amount. These buyers are upside down on their loans, owing tens of thousands more than their trucks are currently worth. Fewer repeat customers returning to dealerships, creating a snowball effect on Ford's inventory crisis. Adding to the problem is the sharp increase in interest rates, financing a vehicle is expensive as the F-250 has become nearly impossible for many buyers. Loan terms have stretched to as long as 10 years to make monthly payments manageable, with some buyers facing payments exceeding $1,000 per month. For many, that level of financial strain is simply not worth it, especially when other manufacturers offer more competitive prices and better financing options. Despite its high cost, the F-250 remains a capable and desirable truck for those who need heavy-duty performance. It offers powerful towing capabilities, advanced technology, and durability that appeals to serious truck users. But capability alone is no longer enough to close the sale. Buyers have more options than ever and are turning to competitors like General Motors and Ram, who provide similar performance for far less money. Dealers have voiced frustration with Ford's lack of aggressive incentives to address the inventory glut. Many believe the company needs to increase rebates and financing offers significantly to stimulate sales. Without these changes, dealerships risk being stuck with unsold trucks as newer models arrive. The situation is becoming urgent, and the window to fix it is rapidly closing. Ford also faces a growing trust issue. Known as the recall king, the automaker has been plagued by frequent recalls, damaging its reputation for reliability. Buyers are wary of spending large sums on a Ford truck when they fear potential effects and long-term maintenance problems. This lack of trust makes it even harder for dealers to attract buyers, despite the discounts being offered. At this point, some potential customers are waiting for even deeper discounts, knowing that dealers may become more desperate as inventory continues to build. Others are walking away from the brand altogether, opting for more reliable alternatives. Ford finds itself in a difficult position, caught between the need to protect its profit margins and the reality of a shrinking customer base. The story of the F-250 is a tale about market miscalculation. Overconfidence in the strength of the truck market, combined with aggressive pricing strategies, has backfired. As interest rates continue to rise and consumer spending tightens, Ford will need to rethink how it prices and markets its vehicles to win back trust and regain momentum. For now, if you're in the market for a heavy-duty truck, you might find some incredible deals on an F-250. However, it is essential to weigh the risks carefully. While discounts are attractive, Ford's inventory and reliability challenges are not going away anytime soon. Proceed with caution and keep an eye on further price drops as dealers race to clear their lots. Ford Bronco, from hot to forgotten. This vehicle was one of the most highly anticipated releases in Ford's lineup, reigniting nostalgia among off-road enthusiasts and casual drivers alike. Demand skyrocketed, and as a result, prices surged to astonishing levels. Buyers were paying over $85,000 for a fully loaded Bronco, with many dealerships capitalizing on the hype through aggressive markups and market adjustments. The excitement surrounding the Bronco led to long waiting lists and made it a symbol of rugged, adventure-ready driving for a new generation. However, fast forward to today, and the Bronco's story has taken a very different turn. Buyers who jumped on the opportunity to own the Bronco during its peak now find themselves stuck in a tough financial spot. Depreciation has hit hard, with some 2022 models now valued at only $38,000, less than half of what many owners originally paid. This significant drop in resale value has created a ripple effect in the market. Potential trade-ins that would have contributed to new sales are not happening. Owners who had been willing to upgrade to newer models are holding back, realizing they would face a financial loss of tens of thousands of dollars by trading in their vehicles. This drastic depreciation is not just a blow to current Bronco owners, it is a growing concern for dealerships as well. With many prospective buyers unable to justify the purchase price of a new Bronco due to the model's declining value, dealerships are left with large inventories of unsold Broncos. Ford dealers across the country are reporting that these vehicles, once impossible to keep on the lot, are now sitting for months without interest. The excitement that once surrounded the Bronco has faded, leaving behind what industry insiders are now calling the Bronco bubble. One major factor contributing to this inventory buildup is the high price of new Bronco models, which remains a barrier for many buyers. Even though depreciation hit used models hard, the price tags for new Broncos remain elevated. Many dealerships have been slow to adjust their pricing strategies, hoping that demand would bounce back. However, with rising interest rates and more affordable competitors entering the off-road and mid-size sport utility vehicle segments, potential customers are turning elsewhere. Vehicles like the Toyota 4Runner and Jeep Wrangler, which offer similar rugged capabilities, are attracting buyers who might have considered a Bronco, but are deterred by its high price and rapid depreciation. Dealerships are now facing a tough decision. They can either wait for the market to correct itself or offer substantial discounts to move their inventory. Some dealers have started experimenting with limited-time rebates and 0% financing offers, but these efforts have not yet gained enough traction to make a significant impact. Without larger price cuts or new incentive programs from Ford's corporate office, the inventory problem is expected to worsen as the 2025 models begin arriving on lots. The pressure to clear out 2024 models will only intensify. The problem is further exacerbated by negative market perception. The Bronco, despite being marketed as a versatile and reliable off-road machine, has faced criticism for reliability issues and recall concerns since its reintroduction. Buyers are increasingly cautious, especially after several high-profile recalls related to engine and transmission problems. This has diminished the Bronco's appeal for those seeking a dependable long-term vehicle, prompting many to explore alternatives that offer better reputations for durability and lower maintenance costs. Dealers have expressed frustration at Ford's handling of the situation. During the supply chain crisis of the early 2020s, Ford, like many automakers, relied heavily on market adjustments and inflated pricing to maximize short-term profits. While this strategy temporarily boosted revenues, dealing with both disillusioned past buyers and hesitant new customers, the Bronco's predicament is part of a larger issue within the automotive industry, as vehicle prices have reached all-time highs. Many consumers have shifted their focus toward affordability and long-term value. Payment buyers, those who prioritize monthly payment amounts over the overall vehicle price, are becoming the norm. For these consumers, even a vehicle like the Bronco, which might have once seemed attainable, no longer fits within their budget due to higher interest rates and tighter lending standards. Many buyers now require extended loan terms of up to 120 months to afford new vehicles, making them even more cautious about high-priced models with poor resale value. This shift in consumer priorities has forced other automakers to adjust their strategies, with several brands introducing more aggressive rebates and competitive financing options to attract budget-conscious shoppers. Unfortunately, Ford has been slower to respond, leaving its dealers struggling to compete. The lack of significant manufacturer incentives has created an atmosphere of uncertainty for dealerships that are already burdened by excess inventory. Despite these challenges, some industry experts believe that the Bronco still has potential for a comeback if Ford is willing to make bold changes. One suggestion is to introduce major price adjustments across the board, bringing the Bronco's start price in line with its competitors. Additionally, expanding the range of incentives, such as offering extended warranty coverage or substantial trade-in bonuses, could help rebuild consumer confidence. Another opportunity lies in improving the Bronco's reliability through targeted updates and better quality control measures, which would address some of the concerns that have driven buyers away. For buyers who are willing to take a calculated risk, the current market presents a unique opportunity to score a deal on a Bronco. With dealers eager to clear their lots, deep discounts are becoming more common, particularly on older model years. However, prospective buyers should carefully weigh the potential benefits against the risks of future depreciation and reliability issues. It is crucial to research warranty coverage, recall history, and financing options to make an informed decision. The Ford Bronco's journey from one of the most highly anticipated releases to a cautionary tale of market mismanagement is a stark reminder of how quickly fortunes can change in the automotive world. For Ford, the challenge ahead is clear: adapt to shifting market demands and rebuild trust with its customer base, or risk further erosion of its reputation. For now, dealers are holding their breath, hoping that steep discounts and aggressive promotions will be enough to turn the tide. The question remains, will the Bronco reclaim its former glory, or will it continue to fade into the background of a fiercely competitive sport utility vehicle market? Only time will tell, but one thing is certain: dealers are racing against the clock to clear their lots before the next wave of new models arrives. Ford Edge, the midsize SUV stuck in limbo. Once a reliable option for families seeking a midsize sport utility vehicle, the Ford Edge is now facing serious challenges in today's crowded market. While the Edge still provides a comfortable ride and decent technology, it has been outpaced by newer competitors. Models like the Toyota Highlander and Hyundai Santa have advanced significantly with better fuel efficiency, cutting-edge technology, and modern styling. Meanwhile, the Edge's design, which has seen minimal updates, is struggling to keep up. This fierce competition has made it difficult for the Ford Edge to stand out. Consumers looking for mid-size sport utility vehicles have become increasingly demanding, prioritizing vehicles that offer a blend of versatility, fuel economy, and innovative features. The Ford Edge, with its aging platform, no longer excites potential buyers in the way it once did. Additionally, rising interest rates and high sticker prices across the automotive market are pushing cost-conscious buyers to reconsider their options. Many are either moving towards sport utility vehicles that provide more for the price, or choosing entry-level luxury alternatives. Dealers are feeling the pressure as the Edge inventories continue to build. To clear their lots, they are offering significant price cuts and enticing financing options. Discounts, cash rebates, and low-interest loan packages are becoming common sales strategies to reduce the unsold stock of Edge models. In some regions, these discounts have reached levels that were previously unheard of for the model. However, even with these aggressive deals, the question remains whether the Ford Edge can regain momentum. The sport utility vehicle segment is rapidly evolving, and models that fail to innovate risk fading into irrelevance. For Ford, this challenge is compounded by the fact that its larger models, like the Explorer, offer more modern features and better long-term value, drawing attention away from the Edge. Furthermore, Ford's reputation for quality and reliability has been impacted by a history of frequent recalls, which may also influence potential buyers' hesitance to commit to a purchase. While current offers on the Ford Edge may present great opportunities for bargain hunters, the long-term viability of the model is uncertain. Unless Ford invests in a substantial redesign and feature overhaul, the Edge may remain stuck in limbo, overshadowed by both competitors and Ford's own lineup. While the Ford Edge struggles to find its place in an oversaturated market, it is only part of a larger issue. Across the country, dealerships are facing mounting pressure as unsold inventories grow and customer demand wanes. This dealer desperation paints a much bigger picture of the challenges Ford and other automakers are grappling with today. Dealer desperation, the bigger picture. Ford dealerships across the country are burdened with an overwhelming supply of 2024 models, while many have yet to receive any 2025 models. This inventory issue is creating frustration among dealers, who are left with vehicles they cannot sell at current prices. Compounding the problem, Ford's response to this crisis has been slow and inadequate, offering limited rebates and financing options that fail to entice potential buyers. During the height of the supply chain crisis, dealerships capitalized on market adjustments and sticker addendums, driving prices far beyond what many customers were willing to pay. This tactic resulted in short-term gains, but long-term setbacks. Many of Ford's loyal customers felt taken advantage of and have since turned to competing brands. Now, dealers are desperate to clear their lots, but find themselves without the aggressive incentives needed to attract new buyers. As the automotive market grows increasingly competitive, Ford's lack of flexibility on rebates stands out. Competitors such as General Motors have been more proactive, offering substantial cash incentives, low interest rates, and extended financing terms to move their own inventory. This strategic difference is impacting Ford's reputation. Investors and analysts have noticed the disparity with Ford's stock performance, lagging behind that of General Motors and other rivals. Dealers are also facing an uphill battle, with potential customers who bought vehicles during the surge in demand over the last few years. Many of these buyers are now upside down on their loans, owing tens of thousands more than their vehicles are worth due to depreciation. For example, a Ford Bronco purchased for $85,000 just 2 years ago may now be valued at less than $40,000. These customers are reluctant to trade in their vehicles for new models, further compounding the dealership backlog. If Ford wants to regain its footing, it will need to implement drastic changes. Dealers are calling for an increase in both cash rebates and financing offers to make vehicles more affordable for payment-focused buyers. Without these adjustments, Ford risks losing even more of its market share and reputation. Time is running out, and with each passing month, the pressure to sell off 2024 models continues to mount. For dealerships, the solution is simple: bigger discounts or an ongoing inventory nightmare. The recall problem. Why Ford is losing trust? Ford has gained the unfortunate nickname, the Recall King, a label that reflects the company's ongoing issues with quality and reliability. Over the past few years, numerous models have been subject to recalls for critical safety concerns, ranging from faulty brakes to malfunctioning electronics. This reputation for recalls has taken a significant toll on consumer trust. For many buyers, reliability is not just a preference, it is a necessity. As a result, potential customers are steering clear of Ford vehicles, fearing that any new purchase might come with hidden risks and future warranty hassles. The impact on dealerships has been severe, despite offering aggressive price cuts and financing options to lure in buyers. Dealers continue to struggle with low demand. Recalls and warranty claims create additional burdens, further discouraging both current and potential customers. Dealerships that previously relied on Ford's popularity to drive sales are now finding it increasingly difficult to move inventory. The combination of quality concerns and steep depreciation is putting Ford in a precarious position, where even deep discounts may not be enough to regain buyer confidence. What comes next? Can Ford turn it around? With thousands of unsold units sitting on lots, dealers and industry experts agree that drastic measures will be necessary for Ford to address its inventory crisis. Many believe that the automaker will need to increase its rebates and financing incentives significantly. Larger cash rebates and reduced interest rates might be the only way to make vehicles more affordable in the current economic climate. Predictions suggest that discounts of up to 40% or higher could soon become common to entice buyers back to the brand. Dealers are feeling the pressure to clear out the excess supply of 2024 models, especially as 2025 models are scheduled to arrive. Without substantial incentives, the situation could deteriorate further, leaving dealers with even more unsold stock. Many dealerships are calling for Ford to take immediate action by providing enhanced financing options to accommodate payment-focused buyers who are hesitant to commit to long-term loans. However, time is running out. If Ford fails to offer better deals soon, their market share could continue to slip, giving competitors like General Motors and Toyota an even greater edge. The company faces a pivotal moment. Either they respond decisively with aggressive pricing strategies or risk watching their inventory crisis spiral out of control. So there you have it. Ford's inventory issues laid bare. Which model situation shocked you the most? Let me know in the comments. Whether you are in the market for a new car or just keeping an eye on trends, it is clear that the automotive world is changing fast. Ford is at a critical crossroads, and what happens next could reshape the market. Thanks for watching, and I will see you in the next video.